We have come a long way since that parking garage in 2019 at Bitcoin 2019, haven't we, guys? What a topic we have. Bitcoin is the most secure, decentralized, non-sovereign asset in the world, so it is no surprise that governments are looking to buy it, including the US government. Before I start, I want to reintroduce the panel. Mathew Sigel from VanEck, Matt Pines from the Bitcoin Policy Institute, and Fred Thiel from Mara. Three experts on the topic. Before we talk about why and how to fund the strategic reserve, what is the strategic reserve? The president signed a historic executive order. Maybe Matt Pines from BPI, can you explain what it is? What is it?
Yes, so the president announced an intention to do this at the last Bitcoin conference, and then he made good on that promise earlier this year and signed an executive order doing a number of things, but the most relevant for this discussion is it established a strategic Bitcoin reserve, and in particular, gave instructions to the Commerce Department and the Treasury Department to identify, quote, budget-neutral ways of acquiring additional Bitcoin at no marginal cost to the taxpayer, while sweeping existing, unencumbered digital assets, into the Bitcoin strategic reserve and then a digital asset stockpile, and importantly, committed not to sell any of the Bitcoin currently held by the U.S. government, did not make a similar commitment on digital assets, and so gave this instruction to his leaders in the Commerce and Treasury departments, and so they have had to go back into their departments and identify potential policy options, and that's what we're going to talk about.
Why would the president, make such an order? Why, Mathew from VanEck, why would the U.S. want a strategic Bitcoin reserve, right? Hold and buy only is the order.
America has a long history of hoarding scarce, volatile, and strategic assets, whether that's gold and silver, euro, yen, and pound, helium, rare earth, petroleum, even cheese. The U.S. is holding Swiss cheese in a strategic reserve. We literally publish a cold storage report every month, and it doesn't include Bitcoin. So as this asset continues to be adopted by sovereign countries, we had another one yesterday with Pakistan. We now count 9 countries that are mining Bitcoin with support from the central government. It makes sense to put our foot forward and engage with this asset class. That's the why.
Fred, what do you think? What's the why in your mind? Anything to add there?
Well, I think it's similar to a strategic petroleum reserve, strategic gold reserve. Bitcoin is now becoming one of the largest asset classes in the world. We're at number 6 or number 8, I think it is, depending on how you count it. And the US needs to be able to defend Bitcoin or use it as an offensive weapon. The only way you can do that is if you hold a lot of it. Why do we have a strategic petroleum reserve? US is arguably one of the largest producers of oil in the world. You have it so you can manipulate price, right? Why do you have a gold reserve? Because it certainly doesn't back the dollar. So you have it so you can defend the dollar in the event of an attack. So a strategic Bitcoin reserve does 2 things. One, it shows that the US says, this is important for us, it's an important asset class, and it's a way to project power. And I think that's why he did it, and I think that's why you'll see the US will build a reserve, and it will be substantial.
Is part of it to think about what comes after the dollar, or is it more like a strategic commodity, or is it both? I don't know, Matt, do you have a thought on this?
Well, the executive order specifically named Bitcoin and singled Bitcoin out in particular as a strategic asset because of its scarcity, and referred to it as digital gold. And that was a signal, being sent to the American population as well as the global population, other national leaders, that the U.S. government sees Bitcoin as a strategic asset. Now, what you do when you hear that coming from the President of the United States, falls into whether you think that was just a patronizing pablum to a bunch of supporters, or is this a signal of a strategic shift? I think that is still an uncertain, question, but I think we're leaning towards the latter. I think other countries are now looking at that executive order and subsequent statements by the White House and senior administration officials, and they are starting to take a serious look internally at how they think about Bitcoin as a strategic asset. We still haven't seen that come to the fore publicly, but those discussions are happening as we speak.
So it's happening. It's happening around the world. It's supposed to happen here. It hasn't quite yet, but I've already been hearing some criticism of this. Mathew, maybe you could tell us some of those criticisms and your responses to them.
Let's address the naysayers' argument against the strategic Bitcoin reserve. I see two principal camps that oppose. The first I would call are the naive maxis. So these are folks who believe not your keys, not your coin, that's fine, but they lack an awareness of fiduciary structures. So I, as a money manager, I cannot hold the Bitcoin of my client. I must entrust it to a third party. That is fundamental to managing money. So as Bitcoin grows into a currency, a commodity with wider acceptance, there will be institutions that want to hold it. Institutions include corporations who need a regulated custodian. Institutions now include governments. The US government is of the people, by the people, for the people. We are the people who can sit in the government and suggest this is a scarce and strategic asset that you should acquire. That's camp number one. Too naive. Bitcoin should be held by institutions. Bitcoin is for everyone. The second category of naysayers I would call the do-nothings. So these are the people who are worried that if the US government acquires Bitcoin, it is a signal of instant hyper-Bitcoinization and the US dollar will go to zero. To me, that is a catastrophizing argument. And what backs the dollar is confidence that our economy is going to grow faster than the competition. Confidence that our money is more productive than the competition. Confidence that the US is a home for capital formation and that money will be treated best on our shores. So if we invest public money in a productive asset that can grow faster, scale better than the alternative, that is confidence in the dollar. Think back to World War II, when there was greenback debt, and after Civil War, greenback debt, and the legislation passed a law that the next debt issuance would be partially redeemable in gold. Did that hurt the dollar? No. It gave creditors confidence that the dollar was backed by something that was scarce and productive. So I don't buy the do-nothing argument, the deficit will take care of itself. No, I think that we allocate strategically, make the US a home for capital formation. Bitcoin is the hurdle rate for innovation, and it deserves a tiny piece of a US portfolio.
Let's talk about how to fund it. How to get from this executive order, which puts Bitcoin in hold and buy only mode, and it puts other crypto assets in hold and sell only mode. We're not going to talk about how to sell those, but how do we buy Bitcoin? I'll start with you, Fred. What are some ideas that people are talking about?
So there are lots of ways that the US could use its assets to help produce Bitcoin, for example. The government has a lot of energy assets, both the military, Department of Energy, Department of Interior, et cetera. There's access to excess hydro energy. There's access to gas license fees. There's all sorts of sources of revenue, if you would, or things that can be used to essentially help generate more Bitcoin. And if the US government goes into the business of supporting the mining of Bitcoin, which essentially they verbally have by the president saying that the US should be the predominant location where Bitcoin should be mined in the world, then it could be generating its own Bitcoin, which is even stronger than buying Bitcoin. Then when it comes to buying Bitcoin, there are all sorts of ways that you can leverage US assets. For example, the US carries all of its gold reserves on its books at a value of $35. And if you look at the current price of gold, it's a lot higher. And so what could you do relative to leveraging that to potentially convert it into Bitcoin?
It's 100 times higher, the price of gold today.
Yeah, it's kind of like how Bitcoin has escalated in price, right? So I think there are a lot of creative ways. I think a little bit the administration today is still trying to figure out, A, what do we have, where is it, how do we put it into a reserve, how do we structure a reserve, And then once they have that figured out, it's really up to Treasury and Commerce to come up with how are we going to acquire more. And I think it's critical. You know, the U.S. making a statement that we are going to have a strategic reserve is an empty statement unless you actually start putting stuff into it. And so the U.S. has to begin acquiring more Bitcoin, whether that's through the mining of it, whether it's through purchasing it, but it has to start acquiring it to really deliver, or as somebody on the panel said to me backstage, they have to land the airplane.
Yeah, talk is cheap. You have to actually stack those sats. Hey, Matt Pines, what are some of the other ideas? I know BPI has published stuff about Bitbonds, about using certain funds that exist already inside the Treasury Department. Talk to me about some more ideas.
Yeah, I would sort of categorize as sort of three types of acquisitions. There's symbolic acquisitions, material acquisitions, and strategic acquisitions. A symbolic acquisition would essentially be sweeping, sort of couch cushion money, right? The things that, say, the digital assets that, they've collected through different seizures, kind of collecting everything from the rest of the government and deciding we're going to sell that Tether, we're going to sell, Ripple, and we're just going to sweep it into the SBR. That's like a symbolic. We're just going to make, a clear commitment that we want to add to the strategic Bitcoin reserve, but it be kind of de minimis. A material acquisition would be using, say in the few $100 million to few $1 billion range. It could be, taking a slice out of tariff revenues that are earned. It could be, maybe these things that are coming up with Fannie and Freddie privatizations, taking little pieces of oil and gas revenue, sort of royalty leases, small, a few $100 million things, but they could add up. But again, sort of building on that symbolic sort of signal. A strategic acquisition, we're thinking in terms of the U.S. actually making good on this, indication they want to be a Bitcoin superpower. Like, what does that mean? Well, I think it means you have to have the largest holdings of Bitcoin as a sovereign in the world. Now, a lot of sovereigns that hold Bitcoin haven't made their holdings public, but, it's plausible that some countries in the Middle East, say, have a few 100,000 Bitcoin. So that probably sets like a target, right? And so if we take away the Bitcoin that we don't have like clear and final title to, maybe we have 100,000 roughly Bitcoin that will be left. So you got to find a way to purchase 2 to 3 to 400,000 additional Bitcoin. That's a significant amount of Bitcoin to purchase. And so you need to find mechanisms that are budget neutral per the executive order to fund that. And the two that I think are the most feasible are using surplus funds in the Exchange Stabilization Fund. There's about $39 billion that's unencumbered, essentially.
What is that, the ESF?
Yeah, the ESF is essentially the government's kind of slush money fund going back to the pre-World War II days. And it's established by the Gold Reserve Act, and it basically gives the Treasury Secretary the authority to deal in gold, foreign exchange, or other instruments of credit and securities. So no specific authority to buy Bitcoin with that, but you could structure essentially an overnight note that's essentially redeemed in Bitcoin, but is denominated the transaction in dollars. And so that's kind of what we've outlined in some of our work. Up to 40 billion. I think they like to keep about 20 billion in sort of a rainy day fund there. That's 20 billion. And then beyond that, you have like these, as Fred said, like more strategic moves, like revaluing the gold certificates. And if you do that mark to market, that could clear $800 billion plus into the Treasury General account. That will likely require statutory authorization because those gold certificates are pegged to the official price of gold. The Treasury Secretary has officially said he's not interested in exploring that. But of course, that's what you would have to say if you're exploring that. And so these are like the options on the table. The last is the Bitbonds idea. That will likely require statutory authorization as well, where essentially you issue a debt instrument, obligation of the US government, with some Bitcoin kicker built into the coupon. And I think as we've seen with in corporate finance, there's a lot of demand for these types of securities that have a traditional kind of a maturity profile of a debt security, but with a Bitcoin kicker built in. So there's lots of options on the table, lots of creative solutions that sort of span the gamut. And I think now that the White House is sort of getting the message that they have to get serious and they have to actually, make good on this rhetoric because other countries are moving.
There's two ways to fund the strategic Bitcoin reserve, right? One, executive action. The problem with executive action is that it's going to prompt lawsuits, and anything over, $100 million, I think, is going to get sued by the Elizabeth Warrens of the world. So I would say start with something by the executive, maybe in the ESF, $100 million, very tiny. The second way is legislative. That's likely to be more durable. Every year, the US Congress passes a budget. They do it through the reconciliation process, which requires just 51 votes. We need to start putting in small pieces of legislation and amendment that make it easier for a company like Fred's company to mine Bitcoin with the government taking a small royalty. And if that Bitcoin can be mined with sources of energy that are especially pollutive, like methane gas, then Fred should be able to mine that Bitcoin tax-free. Government should take a little royalty. We can clean up the environment and accumulate a Bitcoin stack at the same time. There's going to be a lot of pushback to that, so we need to start early, start opening that Overton window, just putting those little amendments in every single piece of legislation that hits the floor. Eventually one will pass. That's how it becomes durable.
Fred, what do you think the most likely fastest pathway? These are all very interesting, and we've now heard a range of ideas. I mean, 10 ideas here to do it. Maybe they all happen, maybe some of them happen, but what would you say is the most likely way that the U.S. government first buys Bitcoin or acquires it?
I think other than just taking the Bitcoin that it has and putting it in the reserve, it's going to be small buys using funds and essentially using royalty fees. I think that's the easy, very simple to do. It's just really an allocation of an expense item. It'll give them time to do the rest of the things that they're going to do.
I think they ramp up. They start small. What about Fannie and Freddie? There's been some talk of this, right? These are the mortgage giants that were, I guess, taken onto the government's balance sheet during the great financial crisis. There's been talk for years of spinning them back out into private entities. I think Treasury Secretary Scott Bessent, when he was running his hedge fund, was interested in that. And there's been some additional talk. Could those things throw off a lot of cash? Is that an option?
I mean, I think if you look at the different ways that the government both generates subsidies and pulls money back out of the system, it could just start collecting Bitcoin and putting it in the reserve and holding it in the reserve and using it as an asset that could collateralize to borrow against also. Right? So one has to think of it as just an alternative potentially to using dollars in the accounting system. Why don't we just start stacking sats, and then we can borrow against those sats?
I do think the revenue neutral comment has done more harm than good, because it's raised expectations that we can somehow transact in $100 billion worth of Bitcoin as long as we can raise $100 billion on the other side. That's not true, right? If you raise taxes to 100% on the top 1% and then tax cut for everyone else, it's revenue neutral, but you still need 60 votes in the Senate. So I go back to what Matt Pines said, the symbolic purchase. It kind of doesn't matter how big or how, as long as it's done and the citizens get used to seeing that their government holds Bitcoin.
One thing I'll add is the context for this discussion is the world economic and geopolitical system going through a kind of a once-in-a-century shakeup. And so a lot of the traditional ways sovereign pools of capital manage the reserve assets and think about their economic and geopolitical alignments is being rapidly readjusted. And so just looking at the US and Japan relationship, it seems like there's going to be some sort of geoeconomic deal done to kind of mutually support each other's bond markets. And this is a recognition of the fact that we are collectively very fragile. Our debt is a glass jaw. And so we're going up against China, which is a peer competitor across all these domains. And China has a strategy of accumulating gold and trying to link the wider economic orbit through their CBDCs. And so I think the US government is looking at this strategic landscape and seeing Bitcoin as a digital counter to China's gold reserves, as well as stablecoins as a counter to China's CBDCs. And those different conversations, haven't quite met yet, but I think we're on this trajectory where these strategic geopolitical deals being done to kind of support each other's collective defense, a commonwealth essentially, using sovereign wealth funds. There's a role for Bitcoin to play in that. And so this is where we go from the purely symbolic to the strategic. And so we want to lay out all these options on the table so that when the conditions are right, strategically and geopolitically, there's a well thought out mechanism to leverage Bitcoin to our strategic advantage.
Is the deep state thinking that way about Bitcoin yet?
I think there are lots of curious people inside the government, right, which is not a monolith, right? There's folks in the government that have historically been very hostile to Bitcoin, a source of illicit finance. They have experiences going back years and years. I think there's a new generation of folks that are picking their head above the parapet that think about Bitcoin in a much more strategic fashion and also see it as a competition over values, right? Like Bitcoin is an open system. It embodies what we think America represents around the world. And especially as we enter an environment where there's an acute competition over what sort of values are going to be embedded in digital systems, from AI to money. I think America wants to be, and there are, I think, aligned, patriotic individuals who want to see that ethos flourish around the world, don't want to see a CBDC ensnare the global south and have China kind of write the rules of the digital future. So I think this is still yet to be determined, like who, those old guard versus new guard, right? But I think there are folks inside various three-letter agencies that are now reassessing the strategic value of Bitcoin.
I think that makes sense. Let me play devil's advocate for just a second, okay? In America, we the people own assets. This is not a socialist country. We do not have the government owning a bunch of things. Well, we do, but should we? And in our last few minutes here, maybe push back on me and explain why it is so important now. Matt Pines, you touched on it a bit, but why is it so important now for the US government, for America, the country, to be thinking strategically about Bitcoin? Fred, kick us off.
Well, I think there are two areas of Bitcoin that are very important to think about. One is it's a huge asset class, and it's important for the US to think strategically so they can defend US investments in Bitcoin and be able to project power. The other piece of this has to do with being able to protect the transaction ability of Bitcoin, which is what Bitcoin mining is all about. Bitcoin miners are the transaction processors of the Bitcoin network. And you have to ensure that enough American allied interests are mining Bitcoin such that other non-allied organizations can't censor American organizations from transacting in Bitcoin. And this is the importance of strategic block space. And I think this is a key thing.
I mean, look at this room. Bitcoin is going mainstream, so we should let it. There are a lot of advocates who have seen Bitcoin as a tool for defiance instead of a foundation for global finance. And I would contend that Bitcoin's true power is not in remaining a niche asset. It's becoming the backbone of a new financial order. And that means we need adoption, not just by individuals, but by businesses and nation states. And so the goal here is not to be a fringe asset. It's to fix the concept of money itself, and that can only happen when Bitcoin integrates into the broader financial system. And that's why the government also, it's inevitable, they will be involved.
I guess I'll finish by putting some numbers on this, right? So in this gold versus Bitcoin kind of comparison that has this geopolitical overlay, if you sort of add up, back of the envelope, total America's holdings of gold, from individuals to the gold ETFs to America's gold reserves, 8,100 tons, we have about 8 to 10% of the above ground gold stock. We don't exactly know how much China has, but that's probably an upper bound. If you actually do the same analysis for Bitcoin, we have between 30 and 40%, depending on how you measure it, of total available Bitcoin supply. And so that's like a 3 to 4 to 1 sort of asymmetric advantage that America has in a world where hard assets are going to be remonetized. It's just what's going to happen, right? The sovereigns of the world collectively are going to have to devalue their currencies, and their debt markets are going to have to take it in the shins. And so America has to ask itself, like, do we win relative to our rivals if gold wins or if Bitcoin wins? And we have a 4 to 1 advantage right now, and I think we should secure that advantage and bring the world to a Bitcoin era while supporting the development of open source tools that allow the rest of the world to participate in the network.
Yeah, it's not even just about the SBR. Fred, you touched on transactability, right? America already is the clear leader in mining and mind share and holding. in technology for Bitcoin, and we need not squander it. Thank you so much, Mathew Sigel from VanEck, Matt Pines from the Bitcoin Policy Institute, and Fred Thiel from Mara. Everybody enjoy the conference. Let's go.
Thank you.